Well, hello again, everyone. Welcome back to Cotton Grower Magazine's Cotton Companion Podcast. This is Jim Stedman, editor of Cotton Grower, and I'm joined, as always, by my good friend and colleague, Beck Barnes. Now, a lot of old-time cotton folks will tell you that you make your crop in August. And from what we've been hearing, that seems to be holding true across most of the cotton belt this year. There's still some areas of concern. I've seen some extreme plant bug and whitefly issues in the lower southeast. Some periods of heavy rain in parts of the East Coast, thanks to a couple of tropical storms. We're seeing some early cutout in some of those Southwest dryland acres. And of course, the continuing seesaw in anticipated production numbers and prices. And we're going to talk about those here in just a few minutes. Overall, the crop appears to be in good shape, and we certainly hope it holds up as growers in the southernmost regions are starting to see a lot of open bolls and are preparing for harvest, or in some cases, continuing to pick. So basically, Beck, there's just a little bit of everything out there right now.
Yeah, it is. It's a time of year where our guys are just kind of in different spots. But overall, I'd say on the whole, and you touched on it, it's been a better year than the past couple of years, especially for our guys out there in the Southwest whose struggles in 2022 and 2023 were well documented with the drought. And they got, in a lot of cases, enough water to get a crop up, which is a marked improvement this year. It was kind of a crazy planting window here in the Mid-South where I feel like it rained all of May, and then it just shut off about midway through June. And so, we went from, as sometimes happens in the Mid-South, we went from, flooding to drought real quick. I remember it was many years ago, I was telling somebody about this the other day. Is it, what's our guy down in Louisiana, Jim? George LaCour.
George LaCour, yes.
I interviewed him one year back in maybe 2011, 2012, and he literally had half a field that had burned up in a drought and the other half of it was flooded. And it's just the way it goes in this wacky part of the world. So anyhow, I'm rambling, but yes, it's been a potpourri. It's been a little bit of everything out there this season, but should wind up being a pretty darn good crop when it's all said and done.
Compared to the last 2 years, it's going to be it's going to look really, really good. So
yeah.
Keep our fingers crossed right now.
Yeah. So, Jim, before we move ahead with this episode, we got several items of interest that our listeners are going to want to hear. But first things first, we want to hear from the American Cotton Shippers Association. They have a brief message that they'd like to share.
The American Cotton Shippers Association, also known as ACSA, is a trade association primarily made up of cotton merchants. Founded in 1924, ACSA members manage the majority of the world's cotton trade, providing services of merchandising, delivery, logistics, and risk management to their customers. For more information on ACSA, including their current advocacy efforts, view their Twitter account @CottonShippers.
All right, as always, a special thanks to our friends at ACSA for that message and for their support.
Well, as our listeners know, nearly 2 months ago, USDA dropped its planted acres number of 11.7 million cotton acres into the market, with an anticipated production of roughly 17 million bales for this year's crop. And as you recall, we talked with Dr. John Robinson shortly after that report about what those numbers meant moving forward on this season. Well, fast forward then to the August supply demand report that came out about a week and a half ago, and USDA is singing a slightly different song. They've cut that acreage number by 500,000 acres, production by nearly 2 million bales, and anticipated harvested acres down 11% from that July reports. Needless to say, the market numbers have been back on the old seesaw once again. So to help make sense of this latest turn of events, we're turning again to our friend Dr. O.A. Cleveland, Professor Emeritus and Cotton Marketing Specialist at Mississippi State University, for his unique perspective on what this means for the rest of this growing and marketing season. And he's going to be joining us here in just a few minutes. But first, Diane Munson, our Cotton Grower Senior Editor, is joining us with some of the latest cotton industry news.
Well, thanks, Jim. Let's start by taking a look at the latest USDA crop progress numbers. this time for the week ending August 18th. Overall, the U.S. crop is still running a bit ahead of its 5-year average. The latest numbers show boll set reported in 84% of the crop, up 10 percentage points in the past week and 3 points ahead of average. Open bolls are now reported in 19% of the crop, up 6 percentage points in the past week and 2 points ahead of average, with the crops in Arizona, Arkansas, Texas, and Louisiana leading the way. Crop condition remains relatively steady, with 42% rated good to excellent, 32% fair, and 26% poor to very poor. During its recent 2024 annual meeting, members of the Cotton Board voted to recommend Cotton Incorporated's 2025 budget request of $89 million to the U.S. Secretary of Agriculture. The $89 million budget recommendation was one of the highest funding levels ever approved for the Cotton Research and Promotion Program. The 2025 Cotton Incorporated plan and budget addresses several key industry issues to increase cotton's market share and ensure long-term profitability for the industry, focusing on 4 key areas: innovation, influence, producer profitability, and compliance. During its business session, the Cotton Board also elected new officers to serve 1-year terms. Akiko Inui, an importer from New York, will serve as chairman of the board. Vice chairman is Matt Famer, producer from La Mesa, Texas. Secretary is Rusty Darby, producer from Chester, South Carolina. Treasurer is Lori Rando, importer from Scotch Plains, New Jersey. And immediate past chairman is Mark Nichols, producer from Altus, Oklahoma. Now back to Beck.
Well, thank you, Diane. All right, well, now let's welcome our good friend, Dr. O.A. Cleveland. As many of our audience will be aware, Dr. Cleveland is Professor Emeritus and Cotton Marketing Specialist at Mississippi State University. And yeah, we just want to welcome him back to the Cotton Companion. He's appeared with us so many times, I have lost track of the number, and I'm guessing he probably has too. So, O.A., as we talk to you, it is now August 20th, and so the most pressing thing out there at the moment, we're 2 weeks away from college football. So as a table setter, before we get going here, tell me, I'm gonna put you on the spot, what are your predictions for the Mississippi State Bulldogs this season?
Well, we will certainly top T-Sun is my primary prediction.
That's for anybody outside of Mississippi in the audience, that is my school, the school up north, Ole Miss, that he is focused on. And I hear that, I hear you.
5-5, 6-5. Thank you.
Oh, now you got to be more optimistic than that. I tell you what, that should give our audience who is listening in for OA's market predictions a good example of how he is an even-keeled predictor of market activity. So you can trust him.
And we will revisit that prediction at the end of the season too.
Yeah, we will. Well, OA, I tell you what, man, we're gonna get in the Wayback Machine here. Let's go back to the end of June. USDA caused a lot of surprise, a lot of jaws to drop when they announced their plantage acreage report of 11.7 million acres back there at the end of June. So now we sit here roughly 6 weeks later, we have 500,000 fewer acres and about 2 million fewer projected bales, and that may or may not be a bad thing. So what happened there and why?
It was very interesting, and it was jaw-dropping. The July report was jaw-dropping, and they picked up those June numbers. And I think probably it was basically just the August report, the July report was an in-house report issued within the Department of Agriculture. There was no field survey. It was based entirely on mail surveys with growers and conversations with growers, as well as conversations with industry individuals. And they were looking at seed sales, and they were looking at acreage with respect to last year. It was I will call it just a cold prediction as opposed to having any hard data. So I think that is why it showed up to be so high. It was, in other words, just not a very good estimate. It was the best under the circumstances that USDA used, but it was just not a very good estimate at all, period.
Okay, well, normally when you see numbers like that, you're going to see a positive blip in the market, and we did for about 24 hours after the August report came out. But it seems like we settled back into that high 60s area. I believe we occasional visit up to like the low 70s or around 70 cents yesterday. It looks like we're kind of back on that old price seesaw that we've seen that we rode for most of 2023, but just with some lower numbers right now.
Well, it does appear to be that way, and I think the market is trying to shift through these numbers that USDA is giving us. As the first question there went back to the July report. Of that particular report told us that we had a lot more, not only acreage, but we had more production than the market was expected. It also showed that we had a little bit more consumption than the market was showing. And if we recall, after that report, it seemed to be an extremely negative report. And looking at the numbers, I remember thinking, well, is it limit down? And then I began to look at the prices and the way the market was trading, and it had no semblance of a limit move down, had very little semblance of a down move. And I said, okay, there's something that we're not understanding here, because with this much bearish information, this much negative information, this market should be going down hard. So no one in the industry believes these numbers. Not only that, the market closed a little higher that day, and consequently, it led me to say that, wow, there's something going on. I can remember during our podcast, our last monthly market report, that what we were seeing, or what I commented on, was this market's a lot bullish than we realize, because we get an extremely bearish report and the market goes up. That only happens when there is a complete misunderstanding with respect to the fundamentals in the market. So after that report came out, and as you say, we went back down into the 60s, tried a 67 or 67 plus, gyrated from 67 and a half, so to speak, up to 69, and just could not break out of it. A very bearish attitude. And behind this very bearish attitude, we continue to see that cotton is moving around the world, but there is very little U.S. cotton that's moving around the world. The market is there, but for some reason, we have not been able to capture that market. And then comes the August report. What was that, last week? And on the 12th, I believe, and it appeared to be extremely bullish. And the market just gave a very mildly bullish, or I hate to even use the word bullish. The market gave a very minor positive price response, and once again leading us to say, well, what's going on in this market? We would have thought prices would have gone higher. In the absence of those prices going higher, we gyrated back down to that little area that you were talking about, in the high 60s, and tried the 68 cents again. And as you say, we tried 70 cents. The market is fighting, trying to figure out this acreage production situation. It's fighting more so than ever before in my career with respect to what exports are going to be. We were, without question, the single leader in exporting cotton around the world throughout my entire career. Now then, Brazil has come in, and they actually topped us last year, and stand a better than the average chance to have more exports this coming season than we're going to have. So it's a market share problem that we're beginning to fight now. However, as we dig deeper into these numbers, you mentioned that we had a U.S. crop decline of 1.92 million bales from the July estimate to the August estimate. So there again, that's a very bullish response. But in the facing a very severe lack of demand, it tells us that our market is only going to respond to supply issues. And the supply issues are necessary to take prices higher. We think in terms of we need probably to get through August, we need September and at least half of October before we are very comfortable with our production. And so we've got another 6 weeks or 8 weeks, at least 6 before the market is going to be comfortable with lower production number. Once that is settled, then the market can tend to move a little bit higher. That would have us moving higher still in front of the peak harvest or the peak ginning period, which is counter-cyclical. But I would anticipate that because of this smaller crop we're seeing, a smaller crop does move higher historically does move higher into harvest. So I think a small crop takes the market higher as we move into harvest. So I think that's what a portion of what we're seeing. I would say that everything appears to be in cahoots with our historical cycles and our historical averages and our historical trend lines. It's just we had a huge, maybe I should not say huge, we had a significant market surprise from USDA in July, and then we had another one in August. And it has added a bit of volatility to the market, in my opinion, but nevertheless, the market has traded 70 cents to 67 cents. And that is going to be the case, in my opinion, until we get another 6 weeks, another 4 weeks down the road. Now, if we can go trade to 70 cents, we can trade to 71 cents. So I don't want to say that's lockstep, but we're not going anywhere above, say, 71 cents for at least 6 weeks, in my opinion.
Okay. Well, you talk about the cycles in this market, and we've seen them, we've seen it cycle down, we've seen it cycle back up and then back down and back up, any number of years after years. I'm not sure we've ever seen it cycle back down with this level of inflation and low demand, and extra costs that growers are seeing at the farm level and that consumers are seeing too. That just sort of adds a little bit of layer of difficulty to all this, right?
It definitely does, and I feel that myself, trying to sort through these numbers and trying to realize the inflation factor and how much prices have increased relative to our demand, relative to market price, and what growers are facing and what growers are going to be able to do to accomplish, and how growers come back in 2025. But nevertheless, in the short term, we have to deal with this crop and these prices. And again, I had a friend call me this weekend and suggest, wow, you're really bearish on the market. Things are really bad. I said they are bad, but I really and honestly do see prices improving. I see market outlook improving. I see all that's based on, I see fundamentals of the market improving as far as prices go. And now, that being said, the fundamental of consumption demand, I do not see that improving until the year 2025. So we're still 4 to 6 months away before we see an improvement in demand. But I do see production going down enough worldwide, not only here in the United States, enough to, in the intermediate term, to offset this still lack of demand that we're seeing. And I see that rate, that carryover level, allowing us to move prices back above 70. And I would think as we get into March or April of 2025, we can get to the 72, 73, 74, and maybe even as high as 75 cents. But I can certainly get very close to the mid 70s as we get into March to April to May of 2025. The one thing that we noticed in the report or lots of things we noticed in the August report vis-a-vis the July report, USDA started, it's ironic, the very first number on the spreadsheet showed that USDA increased carry-in stocks, decreased carry-in stocks about 3.5 million bales. And that actually flowed through the entire report. It was all their major change in carrying stocks, reducing those roughly round numbers, 3.5 million bales. And as you go into the data, they actually got that 3.5 million bales out of Chinese consumption and Chinese production, and they lowered Chinese carry out 3.5 million bales. And again, that number went through the entire report. Yes, we had a decrease in production in the U.S. of 1.9 million bales. We had a decrease in production in India of 500,000 bales. But we also had significant decreases in consumption that offset those decreases in production, and it left that 3.5 million bale decline in Chinese stocks to flow through the entire spreadsheet. Finally, to the very bottom, the very last number, giving us carryover for 2024-25 down 3.5 million bales. Again, equal to the very first number in that table, the beginning stocks down 3.5 million bales. So it tells us as USDA balanced their spreadsheet, and that's why we have these reports every month. We make corrections. They corrected some historical data, flowed through, and it made a lot more sense to the traders and to the market. In the meantime, because of the July report being so negative, the shorts, the funds, the specs and the funds hit cotton very hard, very heavy sellers of cotton, to the extent that short futures contracts basically were at a record level or near record level. So all the money was on prices going lower. Now, the caveat to that is if all the money is on going lower, I've got all my money on lower prices. I've got my aunts, my uncles, my grandparents all selling this market. Well, there's just not anybody left to sell the market anymore. We've sold it and sold it and sold it. Yes, the equity markets, the stock markets, and we pulled a lot of money out of there at the end of August and the 1st of August, and that money had to go somewhere, and it did. It has gone to the short side, a little bit of the grains and the cotton, but it's gone to commodities. But commodities in general are so low, traders, the equity traders, are getting a little concerned about putting money in the commodities. But we're still stuck with this extremely short position in cotton, and every little tick up tells the speculators, well, maybe I need to cover these shorts. Maybe I need to get out of cotton. And the run up yesterday to 70 cents, we saw some what's known as short covering, the shorts getting out of the market. We also saw textile mills that had bought cotton on call. They began fixing yesterday. They've been doing it a little bit all along, saying, yes, I can make money at 67-cent futures, 68, 69-cent futures. But as we see futures getting to 70 cents, we better fix, because if they go any higher, we can't make any money. So we saw buying of futures based on what the textile mill action was about their fixations, and we saw buying of futures yesterday based on the shorts beginning to cover somewhat. So when these shorts really began to cover, because of the massive volume of short contracts, when they began to cover, that's when we'll get to the 72, 73. I have one analyst friend who suggests that they won't cover their contracts until 74 or 75 cents. To me, I think specs will be very heavy buyers at that time or before that time. But if not, if they wait for 74, 75 cents, then we can really get bullish cotton up into the high 70s. I don't even like to mention that because I don't want people holding for that if, in fact, they need to sell at the mid 70s. But there are a lot of positives out there with respect to where prices can go. The negatives are very limited to the downside. I would say the downside ability for December is maximum 2 cents down to 66, 65 cents. But the upside potential is up to 75 to 78 cents. So a lot more upside potential, a lot more reward for the risk that's out there today.
Okay. Well, I think I know we talk about China, and and obviously they've had their issues too. They're still having their issues on it. And somebody told me once that when China sneezes, US gets a cold. And I think this time maybe we've gotten the flu a little bit in there. Maybe we're finally coming out of it. What's the doctor say about that?
Yeah, well, I would agree with you, but entirely on the flip side. Of course, I think the markets are still suffering through the COVID situation. That started everything. But I think probably with the tremendous government spending by the United States, I think that's, but whether it be COVID, government spending, you want Democrats, Republicans, who cares in that regard? Our spending has been so outrageous and so overboard that you and I and the cotton growers are experiencing this inflation that we're having. And that was a huge sneeze by the United States. And that led to the problems in China, in my opinion. And the Chinese market, the Chinese general economy is suffering just as much as the US is. In fact, probably a bit more. And we see those numbers, to me, we see that in USDA's cotton numbers for China, where they reduced cotton imports this coming season by 1.5 million bales. They reduced cotton consumption this coming season by 1 million bales. They increased cotton carryover in China by nearly 4 million bales. So they were telling us that as we look at the cotton spinning and the cotton production sector of the Chinese economy, the entire sector, that sector will still continue to suffer. And if we want to look at the general economy there, all we have to look at is just the housing starts and the housing. Well, housing is basically, it's a very inflationary market and the bottom is falling out. And now this is a place, if you need a house, move to China and buy one. You can get two for the price of one. But probably most of us don't speak Mandarin very well. But so China's economy is extremely poor right now. And that's why we're seeing their imports decline. And as an employer, the textile industry was the major employer in China. It's not the major, but it's one of the major employers. And we're seeing Chinese cotton consumption, Chinese cotton spinning decline. Yarn stocks are declining in China. So consequently, it does tell us that their economy is still in a world of hurt, and they will not buy the cotton that they have been buying. That's very important to us because they have once again became our primary customer. But it's really hurts. It's painful to the U.S. cotton grower in his pocketbook, and certainly emotionally. It's painful to me emotionally to see us losing our primary position as the world's exporter to another country. And let's say, okay, oh no, we're not going to lose it next year. We're going to ship 1 million bales more than they did. Yeah, but we shipped 7 millions more than they did 4 years ago. So they've taken a considerable market share from us, and we have to find a way to gain that share back, and they find a way to affect demand somehow. The U.S. cotton industry must get in on the demand side.
Well, Jim, are you satisfied? I mean, we got a full supply chain analysis there, which is the reason that OA Cleveland is the most frequent guest on the Cotton Companion. This guy, he comes prepared. I'm
not going to give you any points for the ball game. You can forget that.
All right. Well, I appreciate that. I tell you what, OA, I think we're just about done. Jim, I'm not cutting you off on any questions, am I?
No, not at all.
Okay. All right. I just wanted to be sure. Well, in that case, OA, man, I'm being sincere. We appreciate your insight here. And with that, we're going to wrap up. We want to say thank you again, Dr. Cleveland, for taking the time to join us, as you always do. And with the way that this season and the market continues to shift, we are probably going to hear from you again. We could probably hear from you weekly if we really wanted to. So, OA, we thank you, and we hope to hear back from you soon.
Well, you guys honor me by inviting me, so thank you very much. And y'all be safe, be careful, enjoy.
Thanks, OA. And that's it for this episode of the Cotton Companion podcast. Thanks again to our friend, Dr. O.A. Cleveland, for joining in again for today's discussion. Thanks also to the American Cotton Shippers for their continued support and sponsorship of the Cotton Companion. And as always, thanks to you, dear listeners, for joining us. We hope you enjoyed this episode. And if you like what you heard, please be sure to spread the word and tell your friends about the Cotton Companion podcast. Here's Diane to tell them where and how they can find us.
You can find the Cotton Companion in 3 easy ways. First, go to cottongrower.com/companion or simply click the podcast tab at the top of the homepage. Second, subscribe to our channel on iTunes or wherever you find your podcasts these days. And 3, sign up for our weekly e-newsletter, the Cotton Grower e-News, that's delivered to your email inbox every Tuesday morning. You can do that by going to cottongrower.com/subscribe. Also, be sure to follow Cotton Grower on social media. We are at Cotton Grower Mag on Twitter. And on Facebook, you'll find us by searching for Cotton Grower Magazine.
Cotton Companion podcast is produced twice monthly by Tyler Hatch and Kim Henderson, our talented colleagues at the world headquarters for Meister Media Worldwide in lovely Willoughby, Ohio. I'm Jim Stedman. He's Beck Barnes. She's Diane Munson. And we'll be back with you in a few weeks with the next episode of the Cotton Companion. Till then, stay safe out there.
Yeah, he works and he works and he works and he works all day. God made a farmer. Yeah, he works and he